Hey guys, I'm back with another video, and today I'm going to go over how I took these trades today and how I profited from the market on a Friday. I'm also going to go over some news that I read here today and also the news that came out today at 8:30. So first, today at 8:30 there was core retail sales, and the numbers are going down, so the sales are coming down, and 20% of it is made out of automobile sales. So I mean, if you think about interest rates are going higher, people are less likely to buy a car, so it's kind of a terrible time to buy a car. High prices on cars, high prices with high interest rates, boom, less people are going to buy it, so lower sales number, kind of expected to happen. The market did not quite like that this morning, but then obviously I don't really care what the news is when it comes down to trading. I also read this: the US runs on small businesses. So small businesses use smaller banks, and then they have to take credit from those banks. So now the smaller banks have tighter credit policies, so there's fewer loans going to the smaller businesses, and that means less growth in the economy. So that means a possible recession, possible earnings recession, possible recession just in general. So I keep that in mind. I can link this down below, or if you just want to go over to my Twitter, you can read that here too. Just based on the news there. All right, let's get into the market and basically what I'm expecting, and then we'll go over the trades from today. So daily time frame, I did say yesterday that I'm keeping my eyes on this area up within here, debating if we want to get up here higher or come down. But we did have these equal highs that were sitting up above here today that I was looking at. We did reach up a little bit higher. I'm still expecting possibly prices to get up here if we can continue bullish going into next week. Maybe next week it pulls back down and then we get more bullish, or if we hit bullish first and then sell off. So maybe Monday we'll rip up and then we'll come back down the rest of the week. I don't know. Or if we just get up in there and just consolidate the rest of the week, that's probably more like it. Probably get up in here and just consolidate. Or if we just consolidate here some more, it really depends what it wants to do. So next week, I'm going to be open-minded just like every single day. I open up the charts, I'm open-minded. Let's see where price can go. There's a draw up here, there's a volume imbalance, and then we have this high that was just taken. And now we have this daily order block right here. So this last down close candle is acting as an order block, and we saw this rejection midday today, which had another trade off of as well. But if we start to consolidate and we start to distribute here without any clear bullish movement, then maybe we could start to flip back around down below these lows, because this BISI was not touched, and I think it's still a possibility of it getting down there. So I'm going to keep that in mind, or if it just wants to consolidate, come down here first, then maybe even more bullishness up in there. That would actually be better, in my opinion, is to see that happen, because I do like the bulls. Obviously, I like it when my long-term investments go up, but honestly, I mean, I'm in it for the ride for the long-term investments, but then scaling out of shorter-term ones when the market does come higher, and then we just anticipate and look for the next move to happen. So getting into today's trades, what did I see? Starting over here in my group chat, I mentioned today keeping my focus up here. I want to see these highs hit, but the market never gave me an opportunity. So like, if you want to get anything really out of this video, have a bias in mind and don't have FOMO if it goes and hits it without you in it. Because, not financial advice either, but this is like what I've learned myself. I'll give you an example. I'll show you right here. I wanted this high to be hit today. All right, let's go over here, just the E-mini. But then my pattern did form, but it's not in my rules of taking the trade. I was looking for the high up here. All right, this is a nice breakup, retest right at market open, but I do not like entering right at market open right now. I like to wait for at least 9:45, and then I'll trade to like 11:20. That's my highest probability trade setups. So this was not in my time frame of entering, and I did have my eyes on these equal highs. So those are clear as day for me that we were going to go hit those highs. So I did not take that trade. I just watched it go without me. I mean, if price kept going higher, I was going to look for another re-entry to keep going higher if it was a high probability, but I was also completely fine without taking a trade the entire morning session. So me being okay with that basically kept me open-minded. So seeing this, I'm sorry for the psychology part of it, but that's so important when it comes down to when you're actually trading, because you might be like, okay, I really want to learn how to trade, but then it's like you got to know how to hold yourself back, self-discipline. You know, go to the gym. You know, feel the gym. The gym will really teach self-discipline and you doing shit you don't want to do. I feel like the gym has helped me so much with just my trading in general. But after we came up higher, we had S&P divergence with NASDAQ. So NASDAQ was making a lower high, I believe, up here. Was making the higher high. It was one or the other. I know there's S&T on it. So it made the higher high within here, but then the other one made the lower high down within this area over here. So this made the lower high. So after we had our shift in market structure, I was looking up in this area. We shifted down below, and I had this 5-minute inversion gap that was right here on the 5-minute. I did not want to see this broken because we started to close bearish. So I'm going to put this up right here as the red one. We had a 2-minute time frame here as well, a bearish 2-minute closure. And I'm like, okay, we should not come back up above there because we took the higher time frame, equal high liquidity that was sitting right here. So if you put a line across, if it lets me, there, if you put a line across, we came right up above those highs, took all those equal highs out. We came up and rebalanced this inefficiency that's sitting up here. You come down to these lower time frames, where's the money sitting? You know what I mean? 15-minute time frame, where's the money sitting? Sorry, it's going all over the place. The money's all down below here, okay? I'm looking down below here, and I'm looking at this 15-minute wick. Hence is why I was taking those positions on this trade right here this morning. So I was taking those sells right there, trading it down within this area, down below these lows, closing it as the market makes money available to me. I'm taking partials, and I'm waiting to see what the market can offer me after. Took more off, took more off, took more off, scaled more off as it came down. It came down, eventually hit the target, and then we had another buy later on. I'll go over that in a minute. But that was just a completely scale out of the trade. I was content with being done for the day. I was content without even taking a trade today, but I ended up taking 2 because they presented to me. Yesterday, I didn't take any because nothing presented to me yesterday. That's the thing. Nothing presented yesterday, but there's 2 really good setups that I like within my time frames that presented today, so I'm going to take those trades. So then we had another buy situation. There was a higher low on NASDAQ down here. We made the higher low right here, and then we made the lower low here on ES. Also hitting a higher time frame PD array, which is the 4-hour fair value gap and the daily order block. All of them hit the daily order block. So these down close candles are our daily order block. Boom, draw it out. Looking up in this area for a possible expansion to where the stop losses are. If you are short from up here, think about this. If you are short from up here and you expect the market to keep going short and you're holding a runner, where are you putting your stop loss? Below, well, right above the swing highs. Little swing high here. Equal highs here. Oh, people see it as a resistance. Highs here. There's highs here. You know what I mean? And look what comes up. Comes up, takes out those highs. Comes down, comes up, takes out those highs. I personally did not catch it all the way to this one. I took my buy right here on the 5-minute time frame, and I took it out right here. Scaling out here, scaling out here. I'll pull it up right now. Scaling out here, scaling out here. Move the rest down to below the swing low, because if it was going to go higher, it would not have broken the swing low. And why would I say that? Because look at the 5-minute. The 5-minute came down, it reacted off this breaker that was right here. Reacted out the breaker. This rejection block right here in the 5-minute should have held, and we should not have broke this PD array here from below this low. PD array is premium discount array, so it's basically how you measure price and like what is the point of interest. You couldn't even call it a point of interest. That's just how I use it. It might not be the term that all the smart money concept traders use, but like that's just how I look at it, and it definitely works for me. I'll say that. But price did reject right here, and then it came back down, broke the low, came back down in this range. And why? You might be, why would you enter this trade? Because I'm looking at the inversion gap that we have here. And even on the 15-minute, we have this inversion gap from here to here. And then this 15-minute closed above this inversion gap. So there's a lot with it. I mean, if you look at NASDAQ, look at these inversion gaps. The NASDAQ 15-minute closed above it, which also gave me a signal it wanted to keep going higher. And you're like, Adam, it doesn't have to break a structure. No, it doesn't, but this is usually the one I trade, and I like trading ES way more than NASDAQ. But look at NASDAQ. Did NASDAQ have a break of structure at the same time? Yes, it did. It broke market structure right above this high. Boom. NASDAQ broke market structure. We are above and closed this 15-minute candle above the inversion gap right here. And now I'm looking for a retest within the inversion gap to come higher. And that's why I was entering on this trade right here, because I was looking at this area right here. We should not close down below this. And I'm going to go over to another chart that I have up somewhere. I'm going to bring this chart up over here from my chat. Let's bring this up here. Price should not close down below this inversion gap. This is actually the one I was talking about right here. So like this one, we should not close down below the inversion gap. Like if we have a candle close in here, it's invalid to me on the 5-minute. So my entry was actually on the 5-minute. Yes, there were some 2-minute entries. You can scale in a little more. The 5-minute entry was clear. I don't know why I was looking way over there, but there's one right here. So it came down, it broke through the gap, and it broke right back above it. So I'm now using this gap within here for a possible use for expansion higher. So it did start to retest here, and then it continued higher within there. Same with this one here. We have this one right here. Boom. Same kind of concept. Came down this 5-minute. After this 5-minute candle closed above this inversion gap here, We're going to go out in the 2-minute time frame. What do we have? We have a breaker right here. Here's a breaker, and we should not close candles down below that breaker down within there. So then even that's a position that I personally like myself, but I was away doing my other business, so I couldn't focus in on this trade right here, and I was completely content with the other trades today. I took that trade, took this trade, and then if this one hit me on break even, which it did, I was not going to go for this one. But honestly, where are your eyes the whole time? Your eyes are on the target. Your eyes is on the prize, and you're focusing on the prize, and you're focusing on your system. Does your system allow you to take the position? So like that's what I'm looking at the whole time. Am I being objective? Am I following my plan? Is this part of my plan? Is it in my time frame? And if it's not, I'm okay with missing out on it. I'm okay with looking at the chart and observing it and anticipating price to move. For example, this morning, I'll go back to that. I'm anticipating price to hit these highs. I'm sitting out, I'm missing out on the trade, and I'm writing down in my journal that I'm completely fine on missing out. And that's fine because I'm sticking to my rules. Because the ones that stick with their rules, that are very rigid with their rules, are ones that are going to succeed. And we have to be flexible with our expectations. Mark Douglas says that. So if we're rigid with the rules and we're very strict with the rules, and we are flexible with the expectations of when we press the button, and we focus on a probability standpoint, we are likely to succeed if our edge is in a high probability, just like scenarios. Like if you have a high probability edge, which is mine is basically liquidity, SMT, draw on liquidity, and then looking for entries within inversion gaps, order blocks, breaker blocks, all this stuff like that, you know. Same kind of stuff, same shit, different day, you know. Same shit, maybe different session, I should say, because it happens all the time. But I'm going to wrap this up here, so let me know if you guys have any questions. Take it easy. Love y'all.